And a lot of people are wondering whether the rise that we've seen in the past couple of months might just be short covering. It is time to ask a market panel with expertise about what's really going on here.
We're joined by Adam Bold, Chief Executive Officer of the Mutual Fund Store and author of The Bold Truth About Investing, and Drew Canale. He is Chairman and CEO of the Canale Trust. Great to see you both. Drew, I will begin with you. You have some serious questions on the horizon that worry you, such as the foreclosure issue, which we haven't heard a lot of people talk about, frankly, lately. But you say that's still a problem. I would imagine you're concerned about unemployment levels. But does that necessarily shut out the opportunity for the market to go higher?
Well, it's just you're going to see some more foreclosures in the next couple of years. You have a whole set of mortgages that are going to reset in 2010, 2011. It's actually a larger tranche of resets that we gagged on in 2007. So we have that to look forward to. And we also probably have some big issues in real estate, commercial real estate lending. All that has yet to surface.
All right. Well, Adam, the real question here is whether or not what we have seen over the past few months, since March actually, is just a huge short covering rally, if you will. I mean, very often in times like these, when there is a genuine uptick in the market that is sustainable, you see an increase in volume. We had volume at the beginning of this rally, not so much now.
Yeah, but I think when Drew talks about those things, we already know those things are out there. And quite honestly, the fact that people are so skeptical about this rally is actually very encouraging to me. I mean, when you've got everybody piling on going, oh, this market's going to go up, that's when you really have to worry. I think that this market can still move substantially higher between now and the end of the year. And I continue to believe the next several years are going to be pretty good for this market.
Well, Adam, then give us some ideas here, because obviously you know the headwinds, you know the tailwinds. So I know that you're putting money to work somehow. You've got a decent chunk of change in assets under management. What are you doing?
Well, Liz, what we did was at the beginning of the year, we started looking for really good fund managers who had terrible 2008s and separating out the people who had actually gone bad from those that just had a bad year. So you look at funds I've recommended to you since the beginning of the year, the Kinetics Paradigm Fund, symbol WWNPX. This fund run by Peter Doyle is up 31% year to date. You look at a fund like the Royce Low Price Stock Fund, RYLPX fund run by the Royce funds. The fund is up 31% year to date. And then we've got the Westcorp Plus Bond Fund for those looking for some of that money that you want to get a good return on but keep it safe. The fund's up 6.5% this year. That's pretty good for a very conservative bond fund with only a 3.8-year duration, and I think this continues.
Okay, well, Drew, it's time for you to help out Adam a little bit. Allow Adam an ability to hedge his bets a little bit, just in case. Adam, we're not saying you're wrong, but just in case. Go ahead, Drew.
Yeah. Well, Adam, you just got to remember, to make money, you got to sell at some point, so you can't be buying all the time. But really what we've got to look forward to here is at some point we have to get some revenue out of these companies. They've made all this profit from cost cutting, and you can't cut costs to long-term profitability. It's just not going to work without long-term revenue growth.
So how does he hedge his bets? Give him some specifics, Drew.
Well, what he needs to hedge his bets about is he needs to be watching the 10-year bond and the general inflation trend. It's not going to show up this year, but the trade's going to be on before long because the Federal Reserve is pumping money into this system in unprecedented proportions. I mean, no one's seen trillion-dollar moves in Fed balance sheets before, and that's what's happening. And how they pull that money back would be a major miracle. So what he's got to be looking for is some nice inflation plays, gold, commodities. He needs to look into energy stocks. He needs to keep a good balance, and he needs to be careful about how long he is in this market.
Adam shaking his head.
At Canale, we're only about 30% long, so look, Adam needs to be thinking that way as well.
Why do you disagree, Adam?
Look, people think that there's going to be inflation because all this money's out there, but the Fed's putting the money out there, but the banks are holding on to it. If you look at the multiplier, it really has not increased. There is no pricing power in this environment. Nobody can raise prices. You can sell stuff, but you have to sell it at lower prices. I just don't see any inflation in the near term. Okay. And when it does happen, inflation doesn't sneak up on you. It's not like you wake up one day and it's like, oh, we have 10% inflation.
Okay, guys. On that note,
they're not going to ring a bell for you here.
All right,
they're not going to ring a bell for you.
You were agreeing with them up to a point. We got to leave it at that. Drew Canale, Adam Bold. Good to see you both.
We love it. Good discussion.